Hi, everybody. Can you hear me? Sorry. My first time at TechBBQ, and really excited about doing this, and a topic very close to my heart. So I should start. And at the end of it, would love some questions from you in the last 5-7 minutes. So we'll ping you when we're ready. Want to start with, just in case you don't know, the topic is democratization of finance. And want to start with Camilla here, who's co-founder of Speedinvest. Would love to start with you, Camilla. Tell us about yourself, the company, and why this topic is important to you.
Definitely. Hi, everyone. Great to be here. I think it's a little hard to hear us, maybe, so I'll try to speak as loud as possible. I'm Camilla. I'm the co-founder of Speedinvest, and we are on a mission to close the financial gender gap, and we're doing that by educating women on personal finance and investing. And the reason we do that is that there is not a single country in the world that has achieved financial gender equality. In fact, no one's even close. And of course, there are many drivers behind that. One is the gender pay gap. But what we think is more important to talk about and easier to tackle is the gender investment gap. Because investing is such a powerful tool for women to change the status quo themselves. We have now taught close to 500,000 women in over 100 countries how to kickstart their investing journey. And so for us, the topic, democratizing finance, is personal because we want to help half the world's population feel confident in making financial decisions on their own.
Thanks, Camilla. I move on to Jannick, who's CEO of Public in the US, and would love to know the same thing from you. Why did you start this, and why is it important to you, given your white male, not technically financially illiterate?
I mean, hey, it's great to be here, everybody, and I'll try to speak as loud as I can as well. So Public is an investing app, public.com, where you can fractionally invest in stocks, ETFs, bonds, cryptocurrencies, as well as alternatives like fine art and collectibles. And we're on the mission to make the public markets work for all people, which really means that, not too dissimilar from what Camilla said, when you look at something like the stock market in the US, the S&P 500, it's sort of been up 10% year on average in the last 100 years, 7.2% adjusted for inflation. And we actually think that's been one of the greatest drivers of wealth inequality, because today, the 10% wealthiest of Americans own around 90% of the US stock market. And so the stock market itself is not a bad thing. It's not evil. It's actually wonderful. It's an awesome mechanism for how to build your wealth. But unfortunately, we think over the last 30 years, not enough people have taken advantage of it. And so we're on the mission to help change that.
Thank you. And Rosie, I absolutely love what you do, because I feel there's such a strong correlation between policy, to be honest, and innovation. And Rosie has served under the Obama administration and currently involved in the Biden administration. So would love to know a little bit about your journey, and then we'll get to what you've done around democratization.
So yes, hopefully you can hear me. I'm Rosie Rios. I'm the 43rd Treasurer of the United States. And during my time with 8 years in the Obama administration, I led the Future of Money initiative. And so as part of that, it included kind of the impact of the digital payment space, and also how to think about our coin and currency for the future. In addition to that, I was on the Treasury Federal Reserve transition team at the height of the financial crisis, both terms of the Obama administration, and then most recently, the Biden Treasury transition team. I'm actually the only person in the world that has served in those capacities, because it's kind of a tale of two economic recoveries. In addition, I am a regular co-host of several investment reality series. If you've heard of Unicorn Hunters, it's me and Steve Wozniak, the co-founder of Apple, and Lance Bass from the boy band NSYNC, looking for the next billion-dollar company. We've done 3 seasons already, really fun. It's all streaming, unicornhunters.com. And I am a semi-regular guest host of Meet the Drapers with Tim Draper.
And what I love about Rosie is that she's speaking with her son tomorrow, who's a startup entrepreneur.
My son is here
in the audience.
He's an entrepreneur. and we're doing a fabulous panel on the future of investing, and he's my case study.
Thank you, Rosie. Just for the founders in the audience, Jannick obviously set up shop in the US and raised in the US, and Camilla set up shop in Europe, I guess, got into Y Combinator and raising money in Europe. So I wanted to talk a little bit about your funding journey, how it's been as a female founder, contrasting a little bit with you and how it was. And why did you choose to set up in the US versus Europe? Is it access to talent? Is it capital? Is it regulatory framework? Just some of that would be great.
Yeah, so I can start. We started here in Europe because we are from Denmark, so it was the most natural for us. As you mentioned, we were then in Y Combinator and had to flip into being a US company off the back of that. So we've now been operating as a fully American company for the past 3 years or so. And that has definitely had its benefits in terms of fundraising, because most VC investors are just more comfortable investing in legal setups, that they are familiar with. But from a more regulatory perspective, I would say that it's been more beneficial here in Europe and in the UK specifically, where we also have a company. In terms of fundraising and fundraising as a female founder, that is always an interesting topic. For us, I would say it's been quite a roller coaster. We were very fortunate to early on meet some amazing angels that 100% bought into our vision and believed in our ability to execute it. And so our first round was actually relatively easy, I would say. And I think that made us a little naive going into the subsequent rounds, where that definitely wasn't the case. I think we have faced two fundamental issues while fundraising, and I believe they're the same two issues that many other female founders face every day. The first is the fact that almost all VCs are male. I actually read the other day that in the US, 92% of all VC professionals are men. And that means that if you are solving a problem that a male VC has never encountered, of course, it's going to be hard for him to immediately understand why there's a need for your product and why there's a need for your company. And for us, that has meant that we've had to spend a disproportionate amount of time justifying our existence rather than diving into our numbers, our metrics, our team, our vision for the future, etc. And of course, that gives male founders a huge leg up, at least in the beginning, when they're competing for the same money. And the second issue we have faced is unconscious bias. And I think this has been most evident for us in the types of questions that we have gotten and continue to get on a regular basis. And just to give you a few examples, we have routinely been asked questions such as, so, who is actually running the company? And is it really smart to have such a hyper niche target group? And I mean, we're targeting half the world's population, so it's a little hard for us to imagine how that's hyper niche. We've also been asked things like, isn't this more of a girls' pocket money project? And probably the question we have received the most, and most often to this day still have to justify, is when we're planning to have children and how exactly we expect that to work. And from my experience, not a lot of male founders receive those types of questions consistently, but correct me if I'm wrong on that one. And of course, it's also important to say that we have been able to raise a lot of money. We've closed all our rounds, so it hasn't all been bad. There are amazing investors out there. And probably my best tip as a female founder in a world where women raise less than 2% of all VC money globally is to be incredibly persistent and thick-skinned, because it is tough and it's so easy to get disheartened, but you have to keep going and you have to prepare, because the more airtight your business case is, the harder it is to find reasons not to invest. And of course, that goes regardless of gender.
That's exactly that's the advice I always give to female founders is show them the numbers and then, you get the money. I think that's one way to tackle the bias is really be very factual about it and non-emotional about it. But Jannick, over to you and, tell us about, I think you were an entrepreneur in Europe before, you are a second-time founder. So I would love a comparison between the US and Europe and then move on to maybe fundraising and how it went for you.
Yeah, sure. I mean, first of all, a lot of that sounds more like conscious bias than unconscious bias, if I'm being honest. Which obviously isn't great. I mean, for us, so I was in London. I had another company. Then I moved to the States. And so honestly, for us, I think as a second-time founder, as somebody who was able to build a product with my own two hands, kind of design everything, etc. The truth is, it actually was not that hard. And I know that, sounds like a privilege, and it totally is and has been. But I think our first round got done relatively easy. Then it's become, I think, harder and harder as time has kind of gone by. And I do think it becomes more about the numbers. Sort of like in the beginning, I mean, if you don't have any numbers, you're selling a vision, you're selling a dream, you're selling a product experience. But I think especially in finance where, you often find yourself in highly regulated markets, it's really tough to build an MVP in 4 weeks and get it out like you could with a photo sharing app or something like that. And so I think that's sort of something where you're trying to build your case early on very differently than how you otherwise would. All the sort of lean startup playbook methodologies don't really apply in my experience to building consumer fintech products. But yeah, we started off going to the States really mostly because the US stock market is sort of like the Champions League for finance, I always say. It is just where the largest companies in the world go to IPO. It is the market that has by far the most kind of dominance on the global scene. I mean, even if you look at some of the biggest Danish tech successes, Zendesk, Unity, like they eventually all IPO in the US. And so we sort of started going there, unlocking that market, building this whole fractional investing concept so anyone can invest for free, no matter how much money you have in your pocket, down to $1 in every share. And then more recently, we've been taking that concept across the pond. So we launched in the UK about 6 to 8 weeks ago. And we've always said that, our stated mission is to make the public markets work for all people, not just for America. But America just has the best stock market. There's no question about it. But we really think it's something that everyone should be able to participate in around the globe.
Thank you. And I'm just going to go off tangent a bit here because I wonder, is the American consumer market different than the European consumer market? Because, we always talk about this. So just would love your thoughts.
I think it definitely is. I mean, I think Americans have a more long-standing tradition of investing. I think it honestly probably translates all the way back to the American dream and just culturally how everyone wants to. I think there's a better understanding that, like, especially in a high inflation environment, if you need to get ahead, you can't just necessarily live paycheck to paycheck. You gotta save money. You gotta invest that money. And I think Americans have been always faster to kind of realize that, even if you look at every generational cohort. Now, the good news is when you do look at every generational cohort, I do think the gap between Americans and Europeans in terms of consumer culture and investing behavior and everything else is actually closing.
Okay.
And I think that's a function of social media. I think that's a function of living in a more interconnected world. And obviously a function of also folks like us being able to take our American product and move it now initially to the UK and hopefully more markets over time. And so I think you're seeing that, like, if you look at millennials and Gen Zs, there's much more conformity across those behaviors than was the case with baby boomers across Europe and America, 30-something years ago.
It definitely makes a lot of sense. Rosie, coming to you and, female founders and the topic of female empowerment. I read that you call yourself an accidental feminist. And I just want to understand, I've had an accident in my life which caused me to become a feminist, definitely. But would love to know what caused this accident.
Yeah, I do. I call myself an accidental feminist because if you would have known me 15 years ago, I was managing director of investments for a $22 billion firm based in San Francisco. I was born and raised in Silicon Valley. My parents came here from Mexico in 1958 to the US. But basically, my background's in finance. It always has been. But it was when I got the call as one of 24 or so finance professionals to come into the transition team should President Obama win in November of 2008 to work with Secretary Paulson and President Bush's team to implement the legislation that Congress had passed in October of 2008. And so it was during that time, if you remember the financial crisis of 2008, I was living and breathing it.
Vividly.
And I would take my breaks in the Historical Resource Center at Treasury. And people wouldn't know that Treasury didn't just produce money, they produced all the financial products of the federal government since 1789 when George Washington first appointed Alexander Hamilton. So what was in that Historical Resource Center were all the concepts and drawings and renderings of all the financial products ever produced but not accessible to the public. So that's where I would take my breaks. So it wasn't just money, it was savings bonds, it was food stamps, it was postage stamps, military payment certificates. They still produce the security pages of our passport. And it was this pattern that I saw in the heightened stress of that time where I realized that every single image that I came across for these designs of a woman was not a real woman. They were allegorical. But every image of a man was a real man, a founding father, a cabinet member, a president. And so that's when the idea came to me in December of 2008, literally, that the US has never had the portrait of a woman on its Federal Reserve notes in the history of its country. Here we are, some might say the leader of the free world, but and coin and currency is used to institutionalize your history all around the world. So for us, why were we missing half the population? So if you recall what was in the media and the news for way too long, we did announce Harriet Tubman on the $20 bill. It's not over, it's not done, still working on it. But that really opened my eyes to this kind of, at that time there were almost 30 countries that had women on their modern day currency, and we weren't one of them. And still today, kind of exaggerating a little bit, but not really, it's pretty much still us in Saudi Arabia. So again, I had no interest in that 15 years ago, but here I am championing this because it does matter, it does make a difference. And most recently, it took me, so strange in the US, but to change paper currency by law, it's not the president, it's not Congress, it's actually the Secretary of the Treasury, which, by the way, he approved. To change our coins is literally an act of Congress. So weird. But it took me 5 years.
Okay.
I finally passed legislation to put women on our quarters. So if you go to the US, and finally you will see historical American women on our quarters for the first time at this scale ever in the history of our country. And I want to end this with one little thought. So I just recently received this appointment by President Biden to chair the congressional commission that's planning the U.S.'s 250th anniversary. We're such a young country in 2026. So for those who are old enough to remember the bicentennial of 1976, this is that 50 years later, and I'm chairing the most comprehensive celebration the U.S. and hopefully the world will ever see, because that is also the same time that we are hosting the World Cup in North America, which will also take place in the U.S. in 2026, and then 2 years later, the Olympics in 2028. So put your seatbelt on. It's going to be a fabulous journey starting today.
Thank you, Rosie. And just one follow-up. Why did you pick Harriet? And I want to really understand, was it a fight? Was it I just want to understand the
someday that story will be told, not today. A lot of work still to do. But it was, we did a very ambitious public engagement process with the American public, asking who should be considered for our currency. And actually, on that note, we just launched this last 4th of July, what's called America's Invitation, which is a similar process, inviting Americans to share their stories about their own journeys, their own ancestry, their own family histories, etc. So it was really informed by that process.
Okay.
So this has to be grassroots, mainstream.
Yeah, so it's like a public consultation is what you call it. Yeah.
Absolutely.
Okay. Thank you.
A lot of work left to do.
When I was growing up, I remember my dad gave me a passbook on my 10th birthday, and he said, I've opened your bank account, and here's your birthday money. And he walked me down to the bank, physical bank, which was like 5 doors away. And I sat down and met my bank manager for the first time, and like literally wrote that he gave me 100 rupees, which is like $1, but that I put into the bank. And every month or so, I would go back in there, put in my pocket money. So to be living in this age with a digital bank in a digital currency, for me, is really far away, right? So, and finance has moved so much in the last 20 years. I feel really old, but I'd love to hear from you, given you're at the heart of everything, what democratization and what the future of finance looks like for you from this point on. Do you want to start, Camilla?
Yes. So 20 years is such a long time that honestly it's hard to predict or to imagine. But I think one thing is for sure, and that is that we are gearing up to having a more complex financial landscape. I think in 20 years there will be more decentralization. There will be a higher number of emerging technologies and products, more than we can possibly imagine at this time. And I think with that increased complexity, there will be an even more acute need for financial education and financial literacy in order for individuals to be able to navigate that. And I think the companies that will win in that space are the ones who truly manage to make their brands synonymous with trust and transparency. And that's something that we're already seeing today, but I think it will be even more important going forward. And lastly, I think there will be a seismic shift towards more ethical and sustainable investments. I think with what's happening in the world right now, with climate change, various social inequalities, that individual investors will require not just great returns, but also want to make an impact with their money. And therefore, the double bottom line, meaning both profit and purpose, will be incredibly important going forward.
Thank you. Rosie?
Yeah, so I think I want to tie back to something that Jannick said earlier about kind of where the future of finance is going, and specifically the democratization. So you really have to understand a couple of things. One is consumer behavior is the hardest to change. People are creatures of habit unless there's a shock to the system. Well, our shock was the pandemic, right? That is a shock. But I want to bring in what Jannick was talking about earlier about millennials and post-millennials. So basically, anyone that was born in the mid-90s and later grew up with the internet. The world is flat. And optionality for these kids, my son included, means everything, right? It's no longer what they're taught at school, what they're taught at home. It's what they see online and what they know, right? So, but you can't assume that tradition's going to go away. So I want to use coin and currency as one example. When I started in 2009 officially, there was about $835 billion of US currency in circulation. That was 2009. When I left in 2016,
even more.
There was, it doubled, over almost 1.7 trillion. Now, some might say that's store of value. Some might say that's suitcase money, which it is. But literally, at the time when Google Wallet was making its way, 2011, 2012, I was literally getting the instruction to start winding down coin and currency production. And I didn't agree, because again, you know, especially in times of crisis, et cetera, people tend to default to the physical, to coin and currency. So when you look at, for example, coins, when I started, we were making 3 billion coins a year. What do you think it was in 2016 when I left the administration, and the number it still remains today? Any guesses? 3 billion when I started. What was it 8 years later and still counting? A year. 15 billion. So when people thought it was going away, it's not. And again, whether it's entertainment, whether it's money, whether it's any type of product, for that generation, optionality is everything. It's not one versus the other. It's just the pie of options are getting bigger. So I think that's important to keep that in mind. And by the way, there's over 130 countries right now that are looking at central bank digital currencies. So it will happen, and obviously people are looking to the US. It's the world reserve currency. It is absolutely under review, but I'll tell you, in my opinion, it's going to be glacial. It's going to be glacial. It'll take its time by far, but it will change. It will, absolutely.
20 years?
I will give it at least 10.
10 years.
At least 10.
Okay. Thank you, Rosie.
Yeah, what's that quote? It's always, you're negatively surprised how little happens a year or two from now, and you're positively surprised how big the change is a decade from now. And I think that's largely been true. I mean, I think I agree with both of you. The fundamental driver, the way we see it, is actually, honestly, it's less the technology. That's an enabler of it, but consumer behavior, which in the world of finance pretty much synonymously translates into financial literacy. Like, the more financial literacy that you're able to build, generation after generation, the more adoption of various financial products you're going to have, the more of a distributed, sort of equal financial system you're going to have at large. And so the way I see it is like financial literacy is literally the top of the funnel. That's sort of where it starts. There's a lot of technology that can then enable that because, and frankly, these two exist in sort of in a flywheel, because the more you use technology to abstract things like T+2 settlement and a bunch of financial concepts that not everybody in the world needs to understand in order to know how to manage their finances, the more you're able to also build financial literacy through technology as well, right? And so I think those are the two kind of core topics. And then if there's a third one, I think it's trust and transparency, right? I think you're absolutely, I love that quote, by the way, you can't change consumer behavior unless there's a shock to the system. And I would argue in the world of finance, you had the pandemic, then you had GameStop a year later, then you had Silicon Valley Bank a year after that. And so the shocks are just happening more and more frequently, which tells you that the rate of change and the rate of change in consumer behavior is also accelerating. And so I think trust and transparency, like whenever you have a world, I mean, FTX was another terrible one, right? And so I think whenever those things happen, it just builds up the need for trust and transparency. And so when I go talk to my team at Public about what we're really building, it's actually not the most technologically savvy blockchain, this or that. We want to build the most trusted place to invest. Period, full stop. I think whoever does that is going to massively win in the consumer finance market.
And I add two more to that, simplicity and access. So especially, again, as you think about growth, it's all about growth, and it's all about, again, this next generation and how they think about, what you, Robinhood, et cetera, did for investments, and it was very important for that demographic to be able to choose, right? To kind of empower them to make their own decisions about which stocks to pick and how to pick them. So that literacy piece is absolutely imperative, but how to do it on their phone, right? The phone is everything.
100%. I mean, the way I think about it is I think simplicity and access is not fully solved yet. Maybe if you go by asset class, it's been solved for stocks, I would largely say, but like in America.
I agree.
So I sort of have the way you had, you said you had like a big board. Yeah. Like the board in my office is a matrix of markets and then asset classes. What's been solved, what hasn't been solved. So we launched recently fractional investing into fine art, collectibles, royalties even, we're launching soon. That's something that's not accessible to a lot of folks right now. But we use the Reg A Plus framework, which I guess you maybe helped create, so thanks for that. And so that's a little bit how I see that matrix, right? And so simplicity and access, absolutely, and that's a little bit box by box. And then sort of financial literacy is the thing that just spans all of the above.
Yeah, I would agree. I was having this exact conversation with my husband on the weekend, and I was like, why do you pick Charles Schwab? And obviously the trust thing came up, but the transaction cost of doing business with technology has really helped. He's like, as long as you can trade for cheaper and cheaper, but across asset classes, including the illiquid ones, which are currently not there yet, is what's really going to democratize finance. So I will have one last question for you, Rosie, before I open it up, because I'm just interested, which is, do the governments talk to each other? Does the EU, the UK government, does the US government, do we share best practices around fintech? I'm really curious to know, how does America look at the rest of the world?
Yeah, I mean, so the beauty of what happened, for example, with Dodd-Frank, right? The Dodd-Frank financial reform of 2012, that literally created the Financial Stability Oversight Council. And the Financial Stability Oversight Council, of which Treasury is the chair, the Secretary of the Treasury is the chair, includes all the regulators. And part of that discussion with all the regulators, and they're supposed to meet on a regular basis, is case study, precedent, what's happening out in the real world. And especially when you think about, again, look, US growth, is economic growth for everyone. But it's also the case, if you look at kind of the startup world, for example, right? It's US, China, and then UK and India are neck to neck at the moment. Neck to neck, literally neck to neck.
I like that.
But I mean, look, everyone's growth, the tide rises for everyone, right? So you can't have, and obviously, Modi just spoke at the BRICS conference. The G20 just happened. The world of innovation and the world of how to think, that's the hardest part about government. Usually doesn't lead, it follows, right? So this regulation by enforcement, which I know everyone hates, is not ideal. It's just not ideal. So the only way you can think about getting out of that frame of mind is by thinking about, again, case study and how other countries are much more nimble, much more flexible. The UK is trying very hard to get out there to kind of be that startup world. Look what Modi's doing, right?
I love Modi and UPI. He's changed the country.
The digital space, but also trying to be that startup. Neck to neck.
Yeah.
I'll put my bet on them any day.
Yeah. Thank you. I'd love to open it up to the floor. Any questions on the floor?
I think there's one.
Is it on the wall? Can you see anything on the wall?
Is it here?
Oh, it's right here. The question is, are there specific tools, strategies, or resources that you believe are particularly valuable for newcomers in the world of finance and investing? I think it's you and Jannick.
Why don't you go first?
I can start. For us, that answer is fairly simple. We believe that if you are completely new to the world of investing and you want to begin, that it all starts with education. That you have to start by investing your time, because when you feel comfortable and when you understand the fundamentals of how the markets work, you are significantly less likely to be freaked out by volatility in the markets and to keep calm during periods of crisis, which are normal. We've all seen them in the past years with COVID, with the war in Ukraine, etc. And so, our best tip is to just educate yourself if you are completely new.
And Jannick, any books you might have read, or any blogs or podcasts or anything other than Public, get on Public and learn?
Yeah, the truth is, so not going to get into any financial advice, obviously, but the truth is, there's a lot of great books, right? Intelligent Investor, Tony Robbins wrote a great book, but they're all 800 pages. And so I think when we think of education, nothing really beats learning by doing. That's just kind of the truth. At least that's what we've seen. I think if you're able to do learning by doing in sort of a social multiplayer way, which we've tried to lean in through a social layer and everything else, we've also seen that dramatically accelerates the rate of growth. Fractional makes you don't have to risk as much money to get it. And other than that, to Camilla's point, pick a place that you can trust that has, able to have you recurringly invest and take some of the stress out of it and build your portfolio across multiple asset classes so you can properly diversify.
Thank you. The next one is, what are the biggest challenges you face nowadays in the world of finance and investing?
I can start that one too. I think, quite honestly, there's a lot of regulation that, you mentioned that, the coin was a Congress and the bills are somewhere else. There is a lot of regulation everywhere around the world that is fairly outdated, I would say, to tell the truth. And in the world of APIs and mobile brokerages and fluid money and this, that, and the other, I think there's a lot of catching up to do there. And I think, like I said, it's just a function of the consumer has just grown 20 years in the last 3 years in terms of their knowledge and their know-how, and as have the products offered. And I think there's a little bit of catching up to do on the regulatory side there.
Yeah.
You want to add, Camilla?
Yes, I would agree. I think for us, regulation is also the biggest hurdle. As I mentioned earlier, we have companies in 3 separate jurisdictions, and becoming regulated across all 3 is a massive obstacle. It's difficult and expensive, and we have paying members in over 100 countries, so building a product that's relevant for all of them obviously requires regulation in so many different parts of the world. And because each country has its own system, its own rules and licenses that you have to get, it takes a very, very long time, and it's extremely expensive.
Do you want to add anything, Rosie?
Well, I mean, look, you know, none of these are easy, right? When we passed the Jobs Act of 2012, right, there are lots of great provisions in there for emerging growth companies, for crowdfunding, et cetera, access to capital. And it took a while, right? 2015, I think, is when the crowdfunding rules were actually finalized. There's still some recent ones in 2020 and some other rules that were put in place. I mean, this takes time. And believe me, no one wants to see more innovation than I do. But also, you have to be very, very careful on
because
how
it's
that
consumer
happens.
protection.
There is no longer one size fits all. That's just the nature of the beast. And when you have the underlying technology components, right? Look at AI. How's that going to impact everything that we just talked about and compound it even more so? So, I mean, this is where it gets difficult.
Almost got through the panel without mentioning AI.
I know. I got it in.
I would love to do the other questions, but unfortunately, we're out of time. Unless you guys want to pick up one quickly, maybe, what is the role of traditional banks?
I can take that one very quickly because it's interesting. In the US, most of the neobanks are not actually banks. They're financial technology providers that are building on top of partner banks. And the banks essentially become the pipes more than they're the front-end user interface. And that doesn't quite happen in the same way in Scandinavia, mostly because I think the banks are well ahead of the curve in terms of digitization. But that's at least one super interesting
so the banks still stay.
The
banks will still exist in America, is what you're saying.
I think so. They don't hand out bank charters every day.
In India, it's the same.
I agree.
Camilla, anything to add?
I agree.
Rosie?
I agree.
Okay. With that, I guess we'll end. But thank you for listening, and thank you for all the questions. And we're all around afterwards if you want to chat. Thank you.
Thank you.